Welcome, everyone, to our daily Forex market analysis call. And this is in preparation for trading on February the 23rd, actually, 2018. Just a quick disclaimer before we get started. This is for educational purposes only. Trading is a risky business, so please be careful with your money. So as usual, we will start off by taking a look at our Forex factory calendar here. So today we had ECB monetary policy meeting accounts. So the biggest thing they said essentially was that they are not going to provide any guidance in terms of when they will cut back. Sorry. Let me just close the audio feed here. And we can go back. Okay, perfect. Okay, so basically the main thing that they said was that they're not going to provide any forward guidance. So right now, as you know, a lot of the central banks are changing their monetary policy stance. We have seen Fed has basically said that they're going to do further interest rate hikes this year. Bank of England said that they are looking at potential rate hike in May. They moved the date up from November to May. And then ECB now, what ECB is not talking about interest rate hikes at this point. What they have been talking about is cutting back on their asset purchase program. Basically, what they do is they'll buy their own bonds in the market. And as a result of that, they're pumping money into the market, essentially. And they've been doing that since the financial crisis. Now that economies are stabilizing, central banks are moving away from that policy because when they inject too much money into the market, then inflation is the big concern that everybody has. Things become too expensive. It creates this bubble in the market, which can then burst and create problems for everybody. So that's why they have to start raising interest rates. So now ECB said that they basically said that they're going to stay the way they are. They're not going to cut the asset purchase program further, which is what the market was looking at. So basically, there was nothing new in the monetary policy meeting minutes. So when they said that they're not going to provide any forward guidance, that's when we saw the euro drop. However, it was short-lived. So today, US dollar just got killed. We did get positive news for the US, but for some reason, we just had this entire day was US dollar weakness. So that was the thing. There was really no reason behind that. That's just what we got. So with New Zealand here, we got positive sales data. Retail sales. So let's go take a look at what's coming up on Friday. On Friday here, not much except for final CPI number year over year for Euro. CPI numbers are very important because this is the inflation number that the central bank watches. So this will be important here. And then we also have CPI numbers for Canada here. And again, Canada is one of the countries that has been raising interest rates. If the inflation is sort of growing and it's keeping steady, that would be good. But if it starts to drop, then we may have problems. So that's something that we'll have to keep in mind, which means the central bank will not be too keen on raising rates after that. So let's take a quick look at this news story here. So this is the kind of story that I do recommend reading. So article by Reuters here. So Reuters and Bloomberg are the two sites that I recommend keeping an eye on, especially on the market side. So essentially here, it looks like the bond yields declined, which caused the US dollar to drop here. So the dollar sagged broadly on Friday after its recovery this week faded and US Treasury yields declined. So this is, and maybe this is another topic we can take a look at in our educational webinar, so which is a relationship between yields and currencies. So generally what happens is when the yields go up, then more people want to invest money in that country. And as a result of that, the currency goes up. But we can take a look at that later. But basically what they're saying here is the US Treasury yields declined. And as a result of that, so when the Treasury yields decline, people pull money out because they can get better yield or better rate of return somewhere else. So they will pull money out of that country or those bonds, and they will invest them other places where they get higher interest rates. And as a result of that, when people pull money out, the currency drops. So that's what we are seeing here. And looks like that was the reason behind the dollar decline, even though the Fed was actually bullish. So there was no reason for dollar to decline, but because the Treasury yields declined, currency kind of went down with that. So I do recommend studying articles like this because they will provide context for the market. All right, so let's take a look at our day today. As we saw, the US dollar basically dropped. So now we have a bullish candle close. However, we are still in the uptrend. So in this case, I would be looking for a move on both sides here. So right now, it looks like we have just reversed the previous day's move. The candle isn't quite engulfing, which means we still have a downward bias on that. So when we see something like this, the way to sort of look at this would be if the price stays below 123.50 level, then we would see something like this. We would see price drop because overall we're still in the downtrend. So price pulls back and then drops further. So in this case, the target would be 122.80 level, which is basically the bottom here of the pin here. So this is the bias for today. That's my base case scenario. Now, if the price were to break to the other side here, other side of 123.50, then I would look for a pullback into that high and look for a further move to the upside. So at this point, it's kind of sitting in that neutral territory where the overall bias is to the downside, but it's not quite pushing up higher. So we just need to see which direction it wants to go in and then act appropriately. So overall, the bias is still to the downside from the larger scale perspective, and we need to see how price will react. So this is the pin that we saw for when the ECB announcement came in. Price went to this previous high and then dropped from that. So now, if we do see that the price doesn't break this previous high from ECB meeting, then the chances are it is going to come down, and then we could look for price to come into the bottom here. So basically retest of today's low. So we could say 122.65 or even 122.80. I like the 122.80 level better. So that will be the target to the downside. But if it breaks above this is where we just need to be cautious and pay attention. So it looks like it wants to come down, but you never know. So this is the move that we'd be looking for if the price starts to go higher and holds above. So let's say price starts to do something like this, just going sideways, but it's holding above the previous high, then it could go up. So right now, so it's sort of doing this, holding below the previous low here, or previous high, and that's why I'm looking for a move to the downside. So, but if the circumstances change, markets are dynamic, so if the circumstances change and it starts to go higher here, then we're looking for a move to the upside. Pound yen here, pound dollar. Pound had a bullish move here as well. And now we are back into this previous support and resistance area. So again, with this as well, even though it was a bullish move, we saw pins on both sides. It is green, so it is bullish to neutral, but overall bias is to the downside. So the way I'm going to look at this one here as well is that if price stays below this level here, which is 1.39 88 level. So let's say 140 level. If it stays below the 140 level, then the chances are we're going to see a move to the downside. And in that case, the target would be the bottom of the pin here. So This is 138.50 level. So that's what we are looking for. As long as price stays below 140, I'm looking for it to drop further. But again, so we are see how price is testing the highs. So it is consolidating sideways. And when it consolidates sideways, it can go either in either direction. So we have this sideways sort of move. So either it can do one of these and then go higher, or because we have this going, right? So it's a continuation move to the upside, or what it could do is doesn't like the high and then drop, right? So we are neutral on this because price dropped, went up, and now it's sideways. So as a result of that, I'm going to look at how price reacts here. So if it goes higher, if it breaks up, and it breaks the high here and starts to consolidate above the high here, chances are it's going to go higher. And that's what we have to watch out for. So 140 is the level to watch out. So if it's just kind of starts to hang around up there, chances are it's going to go higher. So my bias overall for the pound was to the downside. However, in the near term, it could pull up higher. So watch out for that. So Aussie dollar here, this one I had a trade in, and the unfortunate thing is just my stop loss was at 78.58 and it just nicked me, and now it has come back down. So with this one as well, the overall bias is to the downside, but we have a positive daily close today. So I am going to, again, look at how price reacts to the highs, because a lot of it doesn't have to do much with other crosses. It's the US dollar weakness that's driving everything. So looks like it wants to move lower now. So this whole move looks like it wants to come back. However, if it starts to, again, hang around, like it's, let's say if it bounces off of this pivot point and then starts to do consolidate over here above the high, then we're looking for this move, because that's the likely scenario that could happen. However, right now it looks like it could just come down, right? So overall bias for this is to the downside. So pullback and drop is what I would be looking for, and target would be 77.80 level, so base of this candle. And I'm going to be looking at 78.50. As long as it stays below 78.50, I'm looking for it to move lower. So that's my base case scenario. However, if it does start to consolidate above the high, then we are looking at 7,900 as the target to the upside. So today, with everything, we just have to be more flexible. New Zealand dollar here, the daily candle close was bullish, but we do have a pin on top here. So yesterday I was looking for Aussie to drop because overall Aussie is weak. So hence the move to the downside. Even today, Aussie looks weak. It's just unfortunate that we got our stopped out here, because New Zealand here looks weak as well. So if we were to draw a trend line, we would see that price is following that, right? So I'm expecting this to drop as well. So even though it's a pullback, I'm still looking for price, as long as it stays below 0.7350, I'm looking for it to drop. So that's what I'm looking for. So the base case scenario is price move to the downside. However, just with the US dollar weakness, because if the US dollar weakness comes back up again, we could see one of these, price consolidating above the previous high right over here, and then a move to the upside. So I would not discount that with any of the US crosses. So just keep that in mind. But overall, New Zealand looks like it wants to move lower, but we just have to be cautious with everything today. So this one here as well, it shows that there is rejection of the high. With this one, I would look for price to go and test the pin again. And then we'll have to see what happens at 127.50. So right here, I'm looking for price to go test the high and then potentially do one of these. But again, we have to be watchful for how the price behaves. So this is where we are. We have been in an upwards trend, but now it's starting to flatten out. So we could, when price starts to compress like this, chances are it drops. And in this case, I would like to see a retest of this R1 level, because that would be a good potential short entry at 127.50 level. But if it just stays right here, so let's say it does one of these, then it could do that, right? So with all the different US crosses, like I said, we just have to see what the market will give us and react to that. But we are seeing that there is a rejection of this level at 127.50. So the best case scenario will be it pulls up, pushes up, and then drops, which means we could get that move to the downside. But if it just drops without really getting there, then I'm looking for 1.2620 as the target to the downside. So that's the bias for dollar pound there. Sorry, dollar CAD, and then euro Swiss franc. So euro, we were talking about. We had looked at a potential drop yesterday, and this one actually did drop based on our market analysis. So now it's sitting in the bottom, and now we are looking for further drop. So bearish candle close, and now I'm looking for further drop into 1.1450 level. So 1450 level, which is the bottom here. So that's what my bias would be to the downside here for euro Swiss franc. Pound Swiss franc, we did have a bearish candle close. With this one, I am looking for a further move to the downside, retest of 130.30, and then a potential drop into the bottom, which is 129.20 level, which is right into the bottom of these pins. So my bias is to the downside after a bit of a pullback, looking for entry short. Dollar Swiss franc, that took a hit. Anita, good call on this one. A very, very good entry right at the top there. So with this one, the bias is to the downside, and I'm looking for price to drop further. That's a very nice, solid, engulfing candle close. And part of the reason with this drop was also because the US dollars just got killed across the board. So all US dollar crosses just essentially kind of went to the wayside here. With this one, we are looking for another drop here. My target would be 92.80 level, I would say. So looking for another move to the downside here. I would wait for a pullback into this pin, bottom of the pin, which is 93.50 level, and then a drop, but biases to the downside. Pound yen here, this one, I am looking for a move to the downside, but we could get a pullback into 149.37 level. So if you take a look at the daily here, the bias is to the downside. However, it could go and test the pins right here. So we have to be mindful of that. The target here would be 147.97, so 148.00 level. And right now I am in this short trade. So if you take a look from our technical perspective, this here is an evening star formation, which generally means that we're likely to see another drop. But having said that, if we see further US dollar weakness, this could kind of go sideways. So just kind of keep an eye on it. I am in right now, and it's holding below pivot at this point, so it's good. So just need to, it needs to keep on going, but the bias is to the downside. But just be mindful of this level. I put my stop above here, just so that just in case if we're to go test this level and even higher into the high. So that's what we have to kind of keep track of. But I am expecting it to drop. So if the markets play nice, they're supposed to, I'm expecting a drop. 148.00 is the target to the downside here. And my take profit is at 148.25, I believe. So just taking it out before it actually hits the bottom. So that's pound yen. Euro yen here, same case here. We had a daily pin. We talked about that. So we were looking for a drop. We got that. And now see how price is holding below 132. As long as it stays below 132.00, I am looking for a further drop. So the first target would be 132. 130.120, and then below that we could get to 130.60 level or 130.80 level, so 130.80. But for now, my bias is to the downside. So we're seeing a pullback, and I'm looking for a further drop. 130.120 first target, 130.80 second target. So if you look at 1 hour, this is what we're saying. It is holding, kind of maintaining that downward bias right now, which is good. So I am looking for a drop in this as well. Euro yen. Aussie yen here, nice. We had engulfing candle close, so we were looking for a drop. We got that drop. Now see how it pulled back into this pin, or almost into this pin. The bias is still to the downside here. The target is 83.30 as the first target. And then below that, that's a little far, so let me pull that close. 82.50 will be the second target. So 82.50 second target, first target 83.30, then 82.50. Overall, though, bias is still to the downside. We are seeing that price is holding the levels, which means it has that bearish bias still. So it went into the pivot point, and then now it looks like it is trying to drop. So hopefully that'll continue. Dollar yen here, big engulfing candle close. So the bias is to the downside in this one. And in terms of the target, I am looking for 106.00 level as the first target, and then 105.50 level as the second target to the downside. So dollar yen bias is to the downside as well. Same thing with CAD yen. CAD yen, we had this tweezer top type of signal here. So we were looking for a drop. It dropped. Bias is still to the downside here, and I am looking for 83.20 level. So looking for a further drop. 83.20 will be the target to the downside. So that's what I have. Any questions or anything to add? Okay, if not, we will call it a wrap. And we'll have so I'm going to keep an eye on the trade, but please follow the trade management rules. If it drops 20 pips, I would bring my stop to break even +2. So even if you don't hear from me, those are our standard rules that, I would like to instill in everybody. I like to bring my stop to break even +2 as soon as it hits 20 pips. And another 20 pips after that, I bring it to break even +20. And that's what happened with our pound dollar trade that we had today. It did go 40 pips in our favor, but then it pulled back and we got out with +20. So it's always better to take something out of the trade. So that's what I would just recommend to make sure we are managing the trades properly. So pound dollar worked out well, pound yen worked out well last night, but Aussie dollar unfortunately did take me out. And that was quite unfortunate because it went right to where the stop was. And that happens sometimes. It is what it is. So hopefully our pound yen here will play nice. So I'll keep an eye on that. Just be mindful as you kind of manage that trade. So tomorrow we will have our webinar at 9:30 a.m. Eastern, and perhaps we can take a look at interrelationship between stock market and yen, just because yen has become sort of an important currency right now with what's going on with the markets. So we'll take a look at that interrelationship between yen crosses, like yen and stock market. So I think we are due for a correction in the stock market. So that will become a trade that we do need to look at. So we'll talk about that in our webinar tomorrow. All right, so we'll call it a wrap for now. You guys have a wonderful evening, night, and I will see you tomorrow then. Bye for now.